We would like to sincerely welcome all the participants of today's webinar, which is focused on transfer pricing, being an area of increased interest of Polish tax administration. Let's start with the introduction. My name is Andrzej Puncewicz and I am partner in Crido Taxand, responsible for Tax Litigation Team. We are here together with Michał Szwed. Michał is a senior manager within our tax transfer pricing team. We decided to organize today's webinar focus on not just on transfer pricing, but on the transfer pricing in the context of potential tax inspections. This was to some extent a result of the similar events, breakfast events organized by us several weeks ago in Warsaw for our Polish clients and Polish representatives of Polish firms, which was perceived as very interesting and given the number of participants taking part in these events. Why is transfer pricing so important in today's world in Poland? Clearly, we need to take into account the fact that Polish firms start working in a slightly different environment than just several months ago. As most of the participants most likely know, we have a new parliament and a new government, which took over the government just several months ago. One of the top priorities declared by the new government, including the Minister of Finance, are actions aimed at limiting tax avoidance and base erosion. New government is acting really quickly, and within these 2-3 months after taking over the government, they were able to already introduce taxation on banks and financial institutions, which will enter into force starting from February 2016. Most likely within the coming weeks, the tax on retail activity will also be implemented and will start, and the taxpayers will be obliged to pay it starting from most likely second quarter of 2016. In terms of the subject of today's webinar, combating the transfer pricing as a tool decreasing the taxation in Poland is declared a top priority among the areas being subject to tax inspection, next to the VAT frauds, which are clearly the issue, the problem, not just for Poland, but for many other European countries, as well as combating various anti-avoidance schemes. Also thanks to the special general anti-avoidance clause, which will most likely be implemented into the Polish tax system in the course of 2016. Based on various reports prepared by independent institutions or some institutions working for the benefit of the European Commission, the leakage of the tax, of the corporate income tax resulting from applying sophisticated transfer pricing schemes is estimated between 2.5 and 11 billion euro per year. In view of the various social promises made by the new government, clearly these amounts are very appealing to politicians, and this is one of the reasons for which we believe that the declared intentions of performing increased tax audits in the area of transfer pricing can be viewed as really credible. Clearly, this trend is somehow related also to certain events happening at the level of the OECD, G20, and European Union. Polish tax administration is actively taking part in the works of those gremiums, and clearly these works provide for certain transfer of know-how and certain transfer of new ideas which are subsequently implemented through legislative changes in Poland. The fact that transfer pricing becomes a very important point for taxpayers, not just for tax administration, can be also seen when you see some other recent developments happening in Poland. So first of all, just last year, a new specialized task force was created within Ministry of Finance, which is assumed to be specialized in transfer pricing audits. On top of that, within the existing structure of fiscal control units, 4 competence centers were created, one of those being sacrificed to transfer pricing issues. Minister of Finance, just the new Minister of Finance, announced the intention of more complex analysis of all the taxpayers with annual revenues exceeding 1 billion Polish zloty, which is approximately 250 million euro, declaring that such taxpayers are on the special radar of the tax administration, and those among them who declare the income perceived as not sufficiently high can be among the first one subject to tax inspection. Also, the practice of the local tax administration somehow confirms these central developments. Technically speaking, Polish transfer pricing regulations do not provide for clear and undisputable basis to request the benchmarking study from the taxpayer, even if such basis is not existing. It happens more and more frequently that the local tax inspectors, when performing the tax audit, do request such analysis from taxpayers. We have seen also the first cases of certain business tax-driven restructuring being challenged by the tax administrations. One of the intentions declared by the new government is also applying industry benchmarks, which can be viewed as a point of reference for selecting those entities which do perform lower than the expected average, and such entities can be viewed as more likely subject of the tax inspections of the tax inspection. The Polish administration, the trend which has just been described, and the actions I told about were very much accelerated during the several previous weeks, even if these represent less or more consistent line of acting, even if we take into account also the actions taken by the previous government. First of all, already in 2015, certain changes requiring preparation of the transfer pricing documentation for partnerships were introduced. Amendments to the transfer pricing decree, which addresses specifically the need to explain the logic and the economic rationale behind the business restructuring, was introduced mid-2013. Some other more detailed changes, legislative changes were introduced during the past 2 or 3 years. This includes the introduction of the CFC regime, new thin capitalization rules. The most important and the far-reaching change is the change which introduces effectively the completely new transfer pricing regime, transfer pricing regulations for business. These changes are expected, the major part of those changes is expected to come into force as of the beginning of 2017, while certain portion of the new regulations became the binding law starting from the beginning of this year. And the next few slides will be sacrificed to these new transfer pricing regulations and explaining the details with respect to this new law.
Okay, so let's have a look at the new regulations, because apart from these increased amount of tax controls, there is also a need to implement some effective tools to find out where are these avoidances and how to combat them. What will change from 1st January of 2017? Generally speaking, this is following OECD approach. The changes regarding works of BEPS will be implemented since 2017. Who is the subject of new regulations? First of all, as for the capital relationship, there is only one change, that the entities having 25% of indirect or direct share in capital will be obliged to prepare transfer pricing documents. As a reminder, I would like to mention also that there are partnerships and permanent establishments who are also included in these transfer pricing regulations. So if you have a PE in Poland, or if you have a partnership, there is also a need to have a look at transfer pricing aspects of action in Poland. As for the transfer pricing documentation, of course, this is a compliance part of the work, but when you look at the amount of data that we will start to provide to tax authorities, we need to bear in mind that this information will effectively increase the data that the tax authorities will analyze, and they may also ask questions that they haven't asked before, due to the amount of data that we previously provided to tax controllers. First of all, entities whose revenues or costs are exceeding 2 million euro per year will be obliged to prepare transfer pricing documentation. The subject of the documentation will be not only the transactions, but also other operations. So if you have a business restructuring in place, if you have some changes that are visible in the profit and loss or balance sheet of the company, and this will affect tax positions of the Polish company, you will also be obliged to present such operation in transfer pricing documentation. Generally speaking, the documentation will follow OECD requirements, but there is a strict list of elements that we need to mention in the transfer pricing documentation. I know that during our today webinar, there are also Polish speakers who are listening, so we have also a Polish version that is of the presentation that is a bit more technical, and we will send it to you after the webinar. So you need to have a local file if you exceed 2 million euro per year. As an additional element, we have also benchmarking studies that will be officially obligatory element of the documentation for entities having revenues or costs, depending on which part, which value is higher, of 10 million euro per year. What is important to note here that Polish tax authorities require local data, so we need to have a Polish benchmarking study unless there are no Polish data available. So pan-European benchmarking studies may not be enough to cover this element of the documentation. We need to bear this in mind. Another thing is master file that you probably are preparing in your country. So you need to have a central file that will be also an obligatory element of the documentation in Poland when the entity, the Polish taxpayer, exceeding 20 million euro per year. I think that this may be a bit surprising for you, but in Poland, the documentation needs to be prepared within only 3 months after the end of the tax year. So it's relatively short amount of time to prepare such documentation. The documentation does not need to be submitted to tax authorities, but you need to have some additional document stating that the documentation is in place.
Maybe one comment from my side at this stage. This should have been mentioned earlier. today's webinar allows our participants to ask questions to the presenters. On your screen, you should see the chat function allowing to ask questions to us. It is our intention to go through all the slides and to answer those questions at the end of the presentation. So please do not hesitate to ask questions if there are such, or if anything what we are presenting is not clear.
Okay, so let's have a look at additional reporting requirements that probably may be similar to some extent to those which are available in your country. First of all entities that are obliged to prepare transfer pricing documentation has to prepare a statement on the completeness and correctness of transfer pricing documentation at the date of filing the tax return. Why this is so different? Why it's in red on this slide? Because previously there was no clear statement that there is a person in the company responsible for completeness and reliability of such documentation. Now we need to show who is responsible for this documentation. We need to stress here that there is a bit. It is probable that in case the documentation is not satisfactory for tax auditors, there may be some consequences based on fiscal penal code for such persons. So please bear this in mind. Maybe it is a moment for you to prepare some procedures regarding this limitation of liability within the company.
And of course, this circumstance, this provision which requires the person responsible for finance tax function in the company to sign the appropriate statement, it should be perceived as a very important element also for our foreign participants. So I would assume that this is a very wise move from the side of the administration, because it clearly motivates the Polish local team to request the information, to make sure that certain data presented to the administration is in line with the law, and the people sitting here from headquarters may expect increased attention or tension or requirements from the side of the local teams who, faced with these new regulations, will require understanding certain logic behind the transfer pricing scheme applied within Capital Group.
Okay, so the next one document is so-called Simplified TP report, but then actually it's not very simple. There are more than 400 elements that we need to fill in for reporting purposes. So our intention is to outline that you need to prepare a massive number of information for tax authorities since 1st January of 2017. So in this year, this is the last call for you to check whether we are compliant with TP. The next document is country-by-country reporting. This is actually a document that were described in BEPS reports. So only for Polish dominants that exceeding euro 750 million of revenues are obliged to prepare country-by-country report. One thing to note, this one element is required starting from 1st January 2016. So a bit earlier. So if you are meeting these conditions, you will be obliged to prepare such report on March 2017 for the past year. Okay, so let's have a look at areas of special attention of tax authorities.
And let's start with the communication from the Ministry of Finance announced just several weeks ago, during, if I remember correctly, really last date of 2015. So Minister of Finance, through the Speaker of the Ministry, announced very clearly that transfer pricing is an area of high priority for tax audit in 2016, and that the extra resources will be allocated to audit the potential risk of profit shifting within foreign capital groups during 2016. At the same time, taxpayers were encouraged to review their transfer pricing policies and approach to transfer pricing, and special interim regulations were introduced which say that for those taxpayers who, because of not complying with transfer pricing rules for financial years to 2011-2015, decide to file the corrected tax returns, in those special cases, the penalty interest charged for this period will be lowered by 50%, assuming that this correction is performed till the end of June 2016. Clearly, it is a sort of message the administration wants to send to the taxpayers. We will audit you. Please make sure that your transfer pricing mechanisms are in good shape and order. Clearly, the learning point from this should be made, and given based on the communication, those taxpayers who experienced the significant decrease in their tax profitability during, in particular, last year when compared with the previous years, but also are loss making, can be viewed as those especially exposed to tax audits. We thought that it may be worse for our, in particular, foreign guests to identify those areas which we believe will be subject to special increased attention of the tax administration, and they are presented on the following two slides.
Yes, so first of all, the most important thing that is increasing the attention of tax authorities is the business substance. Because previously the compliance work, the agreements, transfer pricing documentation was to some extent enough for tax authorities to explain how our structure works. Now the questions are about business, about the economic reasonability of the moves done by taxpayers. Also, transfer of intangible assets is interesting for tax authorities. Common optimization structures regarding trademarks, for example. This is actually area of particular interest of tax authorities. Independent valuations, license, insurance, interest. Please also bear in mind here that Polish tax authorities are not very complex with respect to interest issues. So we actually experience a lot of discussions and false thinking about interest on the tax authorities side. So you need to be very clear in transfer pricing documentation, in documents that you prepare, what is about all this interest, why this is subordinated, and what does it mean to be that is subordinated or there is a collateral, because otherwise there is a high risk of mistakes on the tax authorities side. Next thing, as we mentioned, loss or low effective tax rate and purchase of intra-group services. This is actually might be interesting for you because in past years, tax authorities were looking at the evidences of rendering such services. Now they are asking a different question. They asking, is it transfer pricing correct that we are buying accounting services from the UK or Germany, which is 5 or 6 times more expensive than the same service purchased in Poland. So the typical cost plus or TNMM may be not enough in this respect. We need to be prepared for explanation in this area. Next thing are these advisory services purchased from the company, from the mother company or from foreign entities, purchase, transfer of ongoing concern or transaction with havens, tax havens. Also allocation of entities operating in special economic zones and branch offices, permanent establishment. This is also an area of increased attention recently. As Andrzej mentioned before, we have a regulation on business restructuring, which actually follows also a OECD approach on this aspect. Tax authorities, actually in every tax audit that we experience, are asking about business restructuring, business rationale, synergies that we expect in business transformations. So also the aspect of exit charges is very important here. We have not a clear response from tax authorities whether exit charges are tax deductible in Poland. So it's a matter of clear explanation why we are paying for transferring the business. So you need to take this also into account. Another thing is analysis of cost basis. Previously, we were talking with tax authorities when we were talking about services about markups. Now we are talking about cost basis, about elements of calculation. So you should be prepared for that your local company will ask you for presentation of details of calculation about services, because they are asking, because the tax authorities are asking for this, and they want to understand what is the basis of in a cost-plus mechanism or TNMM.
A few words about tax audit from procedural perspective. From purely formal perspective, tax audit focused on transfer pricing issues. It's a normal tax audit, so there is no any extra special procedure which is applied when the subject of this tax inspection or tax audit are transfer pricing issues. So certain general rules applicable to tax audits apply also to tax audits focused on transfer pricing issues. One comment on the quality of staff of the tax administration. Transfer pricing is a very specialized issue and still perceived as extremely difficult for the, I would say, average tax inspector in the countryside or average tax inspector working in the tax office or tax inspection office. At the same time, it is for us absolutely clear that there is a communication because the tax inspectors performing the field work and these special bodies or competence centers, which we described at the beginning of the presentation, because the quality of questions being asked during the tax inspections becomes really high, definitely much higher than it used to be some time ago. And it is absolutely unbelievable that these questions are prepared by just by these field tax inspectors. They are prepared by them in close cooperation with specialized transfer pricing specialists who are not always seen by us or by the firm being subject to tax inspection, which are working in the background, I would say. The very important comment about the burden of proof, which is clearly one of the most important factors during any dispute between taxpayer and tax office or tax administration. Even if this is not clearly regulated in the Polish tax law, based on the prevailing opinion of the tax courts, which we share, based on currently existing law, currently existing regulations, the burden of proof that a taxpayer is not behaving arm's length is on the side of the tax administration. This is a very important observation, because it is the tax administration which should prove that the method applied by the taxpayer is not the right one, or the basis presented by the taxpayer for calculating in case of a cost-plus method was not calculated properly. And it is the tax administration which should prove it in order to make the assessment. Still, we also need to take into account that this does not allow or does not it's not a good argument to stay passive during the tax inspection. And the reason for this is twofold. First of all, the understanding of the burden of proof may change. Why? Starting from 2017, the clear requirement to provide the benchmarking study was introduced or imposed on taxpayers. From looking at it from procedural perspective, the development which I think can happen maybe in such direction that this need to provide the appropriate transfer pricing documentation is perceived finally by the court as a sort of shifting the burden of proof on taxpayers. So if the administration claims that the documentation was not prepared properly, or the economical analysis presented by the taxpayer is not convincing, then the tax administration may try to shift the burden of proof on taxpayers, claiming that they were not, even if being obliged by the regulations, they didn't prove that their tax settlements are in the right order, are arm's length. The second reason for being active during tax inspection for presenting the explanations and various documentation supporting approach applied by the taxpayer is the specificity of the Polish regulations related to the procedure at the level of the court. The role of the administrative courts in Poland assumes control of the actions taken by the tax administration. So the possibility to perform any work related to evidence, to gathering evidence at the level of court, is extremely limited and close to zero. So effectively, if certain documentation is not gathered during the stage of the dispute in front of the administration, then most likely we will not be able to gather this documentation at the level when the dispute goes up to the level of the administrative court. Finally, the comment which can be also most likely known to you from your jurisdictions, we need to understand that it may be extremely difficult to convince the judges to certain economical ideas, because in Poland, in order to become the judge of the administrative court, you need to be a lawyer, and we believe, and this is quite strong belief, that judges of the administrative courts are not really well equipped to deal with transfer pricing cases. And there are some of the transfer pricing cases, and understanding of certain economics of the transactions or economics related to transfer pricing by judges who are lawyers and apply very legalistic approach to analysis of transfer pricing regulations may be limited, and thus it's extremely difficult to perform the appropriate work at the level of the administration, because at the level of court it may be very difficult or not possible.
Yes, and one thing I will add here regarding these judges, because when you look at the Polish transfer pricing regulation, there are actually no very precise provisions on that. So in some jurisdictions you have a special decree, a lot of documents, manuals that explain to taxpayers and to tax administration how to deal with transfer pricing. In Poland, we have very limited regulations in this respect. So that's why it is extremely important to explain on this first part of TP audit what we are talking about.
How does it work in practice? So I said already a few words about the practical side of the tax audits. We provided you on the slide with several examples of the questions being asked during the tax inspections performed during the past several months. It is absolutely clear that the tax inspectors are supported by specialized TP audit teams. Given one of the points which I wanted to mention is also the point related to the political environment. It is clear, very clear, that there is or there will be very high pressure on the local tax administration to not only increase a number of tax audits, but also to increase the number of tax audits which are perceived as positive from the side of the administration, those which are close with the tax assessment being made. One of the factors which needs to be taken into account is also this very much legalistic approach of the courts and the relatively low experience of the courts when dealing with transfer pricing cases. There are first transfer pricing cases. Quite often they are intradictory. So, for example, when you look at exit charges, they are, you can find the rulings which say, okay, when Polish company is transferring the business out, then exit charge should apply. But on the other side, you can see the ruling saying that when business is transferred from Belgium to Poland, it's not justified to pay anything. Of course, this is an early stage of courts dealing with transfer pricing cases. Let's hope that the situation will improve, but definitely during the first stage of increased number of tax audits and increased activeness of tax administration in this area, there will be some decisions or court rulings which can be viewed as clearly wrong from purely technical perspective.
Yes, let's have a look on the further steps, how and when to get ready. We think that due to the fact that starting from 1st January 2017 there will be a lot of documents that you will need to prepare and present to tax authorities, the financial year of 2017 will be too late to be prepared, because any corrections, adjustments during the year will be subject to tax control, as we mentioned in this communication from Ministry of Finance. So we think that this year is the final year for verification audit of transfer pricing within the group. Probably some changes. Maybe you also need to analyze your sensitive tax areas resulting from the increased range of data. This report that you will have to prepare and submit to tax authorities may to some extent be helpful, because there are some areas that will be especially interesting for tax authorities, and you need to focus in the first line on that. The next thing is new way of thinking on transfer pricing, which probably you are familiar with in foreign countries. In Poland, in the past, actually we could only focus on preparation of transfer pricing documentation that was very limited. Now it's over. We are talking about business rationale. Ministry of Finance puts a pressure on analysis of economic substance, economic reasonability of transaction flows made within the group. The next thing is cooperation with the group. As I mentioned before, you need to maybe you will be obliged to submit some more documents to your local company in Poland regarding the tax cost basis, documents about calculation, royalties, because tax authorities are asking for this. Benchmarking analysis, as I mentioned, you have to be prepared for prepare a Polish sample of companies. A pan-European benchmarking may not be enough here. Next thing is the fiscal penal code and responsibility of persons responsible for preparation of transfer pricing documentation, and verification if the documents from the group are meeting Polish rules. Benchmarking, but also master file, which is described in Polish regulation about the elements which should be included there.
Given our audience, our today's audience, I think I would put emphasis on one of the points described by Michał, namely the need of cooperation between the headquarters and the local finance team. So very often up till now, the local finance team did not have appropriate access to all the data explaining certain logic applied or decided for transfer pricing at the group level. We believe that this should change. In order to be able to really successfully defend the transfer pricing position of the local company, we will need to have the access to the logic and documentation gathered and prepared at the central level, because without this, it will be extremely difficult, not to say impossible. And our foreign participants should expect, I would say, deeper and bigger requests from the local teams. Moreover, these requests to understand the logic, to provide them with the benchmark, or to provide them with the explanation of certain logic applied when deciding about the transfer pricing policy, is something which is really justified and should be taken into account at the headquarter level in order to be able to smoothly go through the tax inspection and defend the technical position presented by the local company. I think we prepared, we went through all the slides which we have prepared. We have a couple of questions from our participants. Let's start with answering them.
Yeah. Okay. So the first question is regarding the CFO from abroad and chief accountant. In some cases, it may be a solution, but maybe you are able to manage the risk on the local level. So we need
I think the question is about really CFO coming from abroad being the CFO of Polish company. That's how I understand the question.
Okay.
Clearly, the CFO, the person from abroad, the CFO at the group level is not obliged to sign any documents related to the local Polish company. These are the persons who are employed or acting on behalf of Polish subsidiary who are obliged to make a statement about the completeness of the data included in transfer pricing file prepared by the local company. The law does not specify whether it should be chief accountant or CFO of the company. Up till now, I would say the dominant practice was that the tax declarations were signed by chief accountant. When we look at the transfer pricing documentation and information included there, which are very much business related, effectively part of this information goes beyond the competence and information possessed by the chief accountant. So while it may be a independent decision of the local company who signs the documentation, there are some arguments to say that it should be a CFO of a local company who should have much wider and bigger picture about the transfer pricing policy applied and the logic applied behind certain schemes than the chief accountant of the company.
Yes. Okay. So the next part of questions regards English documents. So unfortunately, in Poland, you need to prepare all documents in Polish. So also the master file needs to be translated as well as the benchmarking study. One thing to note that the master file should be prepared within 6 months. So the local documentation within 3 months. The same with benchmarking study. We can wait for the master file, but it should be prepared translated into Polish. Next thing.
The questions about the documentation provided in English.
Yes, so I have already answered this. So the next one is on the slide 19. You mentioned a limit responsibility of the signing. What does it mean? Maybe not the signing itself, but the procedure of preparation of transfer pricing documentation and who is responsible, what data are provided by which department. So this is a complex issue. So you need to analyze what data are provided by whom and who is responsible eventually for signing.
So let's face the reality. Up till now, very often, the local transfer pricing documentation was treated, the need to prepare the local transfer pricing documentation was prepared as some sort of, burdensome exercise, which needs to be made to comply with the law and which needs to be made and is burdensome. So this was entrusted to relatively junior people. We think that this era is over. The transfer pricing documentation is becoming and will be an important tool to defend the position of the company. And this documentation, even now, is already very carefully studied by the tax administration during the tax audit. So we better really know at the relatively high level what is being put there. Clearly, this documentation is very often prepared by external experts. But these external experts not always do understand properly all the processes and functions as they really work within certain organization. So this absolutely needs to be reviewed and validated by the appropriately senior level from business.
the next question regards the benchmarking study and ability to defend it on the court level. So we need to be precise here, because if you have the benchmarking study and if it will be presented on the first part of the proceeding, this is approved. This is evidence. So the next level, the court will take it into account. If tax authorities want to challenge the benchmarking study, this is only the first part of the work, because they are saying your benchmarking study is not complete or not appropriate. But what's next? The next move is the move of tax authorities. They need to have an assessment based on what?
So effectively, I would agree with the statement about the increased risk in view of the relatively low level of experience of courts. Yeah? Because this is a sort of incentive for the administration to test the system and to try to see how far we can go. And I would think that such or similar practices are known from other jurisdictions as well. When I spoke to our colleagues from Taxand in Spain, then they declared that when it comes to challenging certain international tax structures, Spanish tax administration goes really far. And because of the political circumstances, the atmosphere, the needs of the budget, this is very often accepted by the courts, even if technically speaking, certain position taken by the administration is really aggressive and going really far. I would think that we may be facing the similar situation here in Poland, and that this situation, that during the first phase, when there will be much more tax cases than it used to be during past years, some of the decisions will be clearly wrong, and let's hope we will be able to correct it, to verify it at the court level, and the worst decisions will be eliminated. But the risk that some decisions, which technically speaking are wrong, will be sustained by the court exists. And this is clearly needs to be taken into account when preparing to the tax inspection. One of the questions asked to us is about the liability of the director to criminal proceedings. Formally speaking, these are two separate procedures. Namely, one is assessment being made towards the company. A separate procedure is related to the potential penal, fiscal, personal liability of the persons responsible for tax settlements or for the finance function of the company. We prepared just recently quite comprehensive, I would think the most comprehensive study in Poland about the penal fiscal responsibility of the directors, of the persons responsible for tax or finance issues of the Polish subsidiaries. This shows that the penal fiscal proceedings, looking at the past, was initiated normally in 1/3 of the case of the assessment being made by to the company, which means that approximately in 30-35% of all the cases, the decision on the tax assessment results in the personal fiscal responsibility of the persons responsible for the company. Not going into details, the picture is pretty pessimistic, because in 95% cases, when the penal fiscal proceedings is initiated, the final decision is negative for the person responsible for taxation or for the finance function of the company. Which means that if the criminal fiscal proceedings is initiated, then normally it ends up with sentencing the person, even if normally it's really about the necessity to pay certain fines, to pay certain amount of money, which should not be viewed as extremely high. Of course, it's also each of the members of the management board which can be held liable for penal fiscal charges. Moreover, our report shows that the persons held responsible for penal fiscal crimes or offenses were normally the board members, much more often than you would expect. It's maybe about the base. Of course, I don't want to speak too much about the criminal fiscal proceedings. For those interested, we are just in the process of translating our report on penal fiscal liability into English. So all those interested will be able to have access to this report and to study the detailed rules, which are based on the analysis of more than 400 rulings issued by Polish courts with respect to penal fiscal responsibility. For now, I think we are about to finish our presentation. Thank you very much for your presence during this webinar. Of course, we hope to be able to be in touch either via phone or personally, because speaking just to the camera is not extremely easy for the presenters. The last message which I wanted to share also with you is that, except for this particular webinar sacrificed to transfer pricing issues in the context of the potential litigation, is related to another webinar which we plan to make in 2 weeks. A number of various legislative ideas and changes introduced to the Polish tax environment is very high. Therefore, further to some of the requests of our foreign clients, we decided to organize the webinar, which will go through the various ideas announced by the government to introduce some far-reaching changes in various areas. For example, to replace the existing VAT regulations by the completely new VAT Act, or to introduce this general anti-abuse clause. We will be sharing the communication about the upcoming webinar with all the participants of today's webinar. For today, thank you very much for your attention. Let's stay in touch.
Thank you.